Hello viewers, in this video I'll be going over WTI crude oil, ETF ticker symbol USO. Today on the 1 hour chart we see a divergence on the 1 hour MACD and we still have support on the 18 moving average on the 1 hour chart. As for the 4 hour chart, we starting to turn positive on the MACD. That's a good note to see, but also concerning as we haven't breached the 200 moving average as we failed several times, one back in, I would say, April 21st and as well as April 13th. If we do fail this once more, that is a possible sign we may head lower. And another concern is that we also made a lower low since we're hitting these resistance and basically a flat ceiling or hitting resistance, but we also breach lower. That could also be a concern for the downside. And same thing for here, the 200-day moving average. This green line represents the 200-day moving average, and at the moment on, I would say, Wednesday we gapped up, and I do believe we have a good chance of filling in that gap. And at the moment we also see a convergence on the MACD still remaining. Ideally, in order to break out of this downtrend, we need to close above this 200-day moving average soon, not keep being bombarded by resistance. So ideally, well, first we do need to hit or close above past resistance, and I would say ideally if we close above $11.90, that's a good indication that there's possible support once we breach out, and use the 200-day moving average as support as we climb higher. And if we do eventually fall down lower, lose steam, the first support is, I would note, since past videos, is this August 8th video. We gapped up, and I do see this as a possibility that we may fill it eventually, this gap. And if we do move on higher, that price movement is roughly around 1.7% higher, and if we move down, that price movement is around 5.6% move down. So let's head to the forecast model. On here I'll go day by day, where WTI crude oil will head to the next coming days. We have 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these models we should focus on? Ideally the model that is the best fit to the current trend, and we have the current trend right here, and I believe this trend in question is the best match, and this trend dates back to January 27, 2012 to April 24th, 2012. I'll point out why these two charts are similar. So what we have in the beginning of the trend, we start off on the bottom Bollinger Band or below the middle Bollinger Band, and then we proceeded to move on higher and up channel for several days, but we lose steam, and eventually we encounter price resistance. We weren't able to, I would say, close above the middle Bollinger Band for several days, so that is a concern. And at the moment we do see a price right towards the end that close above the middle Bollinger Band. So we have that price action. So on down here we see similar patterns. We start off on the bottom Bollinger Band right down here, and let's make this bigger, and then we proceeded to up channel for several days right here. Next we lose steam, and we only see the price action slightly below the middle Bollinger Band, and right towards the end we see it revert back to the mean to touch the middle Bollinger Band once more. So we have about 1, 2, 3, 4 points. We also have 1, 2, 3, 4 points on the current trend. So there's reason to believe that the trends and patterns are the same. The outcome and forecast should be fairly the same. So back then, WTI crude oil was down roughly around 90 basis points back in January 27, 2012 to April 24th, 2012. So I do see WTI crude oil heading sideways, favorably more to the downside. So that is all. If you enjoyed this content, feel free to like, comment, subscribe, and thank you for watching.